Hi, welcome to our update of the news and events for the week starting the 14th of November from Trend Signal. Okay, last week, interesting week. Stocks fairly mixed to sort of unchanged on the week, but the big story was the sharp rebound in the dollar, which was surprising given the poor home sales data, the poor ADP non-farm payroll data last week, and also the consumer confidence. They all missed consensus. Manufacturing beat consensus, which was sort of a rebound from the previous months, but European data as well was below consensus. German retail sales but missed by quite a bit, and the European Economic Area unemployment hit a record rate of 12.2%. So all is not good, which is strange why the equity markets still rally. Strange but not surprising given the FOMC minutes last week that effectively underline the fact that there won't be any QE, although the markets were a little bit surprised that the Fed mentioned December. So I think a lot of commentators expected no tapering of QE to happen until probably March, April time. But that really brings us on to this week, because it is key. The data this week will let us know whether we are going to be getting any tapering from the QE sooner rather than later. The all-important data this week is the first reading of the third quarter GDP in the United States. That comes out on Thursday, and we're really looking at a softer number from the previous quarter. 1.9% is the first advance estimate. They have three readings of this data. This is the first advance reading for the third quarter GDP, and we will see the effects of this partial government shutdown and the debt ceiling that was resolved back on the 9th, 10th of October. So a lot of other data as well. Here we are on Tuesday. We've already had the Reserve Bank of Australia with no change, but there are other interest rate announcements this week as well. The most important being probably from the Eurozone. So if we just jump through to Thursday, we have our own UK announcement at midday. We're not expecting any change there, and indeed, despite some of the comments made by the Italian finance minister overnight, we're not expecting any change from the ECB. That comes out at 12:45. No change there, with a press conference at 1:30. So there could be some turbulence depending on what is said in that press conference. Okay, other events obviously this week. I mean, the big lead up this week is to the non-farm payroll on Friday. Very, very key data. In fact, Thursday and Friday are really the two key days this week in terms of interest rate news, announcement from the central banks, and obviously the non-farm payroll. The previous non-farm payroll, which we caught up on the Tuesday last, that was really quite out of date by the time it was released. Obviously it was for the September data. This is the October unemployment rate, which is a lot more relevant to us and the markets. Not expecting a particularly good number, 126,000 from 146 the previous month. Seems very soft. We're way short of the numbers of jobs that should be created if the economy is to be picking up. And I think if we are going to get a soft number like that, it's likely that the markets will price in QE tapering really to sort of March, April time. I think it's highly unlikely it's going to be December if we get a number as soft as what is expected. We finished the week on our preliminary University of Michigan consumer sentiment number. That is also key, a strong leading indicator. We missed on the consumer confidence number last week from the conference board, and this will just underline the effect on consumer sentiment by this partial government shutdown and the discussion over QE tapering. So a lot to look at. Stocks, well, they are continue to move higher, although there's more polarization in the moves now. So I think we're certainly on the FTSE, we're at a little bit of a watershed possibly, but the US indices and DAX continue to remain very steady, and seasonally there's a good time. The dollar, well, perhaps pausing at the moment from following that significant rebound last week, with euro dollar the euro falling probably just over 300 points on the week last week, and gold following it obviously as the dollar strengthened. Anyway, there we go. That's an update for this week. We will also be reconvening on Thursday to catch up on events. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.